we see that banking services, whether accounts or payments or lending, will be delivered through these tech companies in the future. An e-commerce seller selling on Amazon, you may be offered capital through the Amazon Seller Central. And in the background, it'll be YouLend providing risk assessment, underwriting, bringing capital. Are your reviews going up or down on Amazon? Do you have a lot of chargebacks for your deals recently? So we get a lot of those sort of data points, which are really helpful. The latter, that over time it will become more and more normal to access financing within the software you use to run your business.
All right, guys, welcome back to Wrap Up Podcast. Today is a special episode. For past several episodes, I've been talking a lot about crypto, about agent commerce, but in this episode, I've decided to move away totally from these topics to focus on embedded finance and embedded lending. And today, I'm joined by Jakob, Chief Commercial Officer of YouLend, one of the companies that's providing embedded lending services in the UK and Europe. Jakob, welcome to the show.
Great. Thank you so much for having me, Sam. Really excited for the conversation.
Likewise. I've known you guys for some time now. So when I was working at StonePay as a product manager, we were building basically an ecosystem where we would offer a wide range of services to businesses as well as individuals. And one of the ideas was to offer embedded lending. I remember reaching out to you guys at that time, but unfortunately you had strict requirements. You have to have a number of customers before we can go and do integration. But it was great to learn about YouLend and that there is embedded lending services. So let's start with simple. Let's try to explain this. So if I am a merchant using your platform, if I am a merchant using platforms like Shopify and eBay today, where do you guys sit? What do you actually do for the merchants as well as platforms?
So YouLend, we're an embedded finance company. We help small businesses access financing through the software they use to run their business day to day. So if you're an e-commerce seller selling on Amazon, you may be offered capital through the Amazon Seller Central. And in the background, it'll be YouLend providing risk assessment, underwriting, bringing capital, taking care of a lot of the regulatory complexities. The reason we do what we do today is really to solve problems for two customer sets. So one, small business customers, we see that they struggle to access financing, but when they do, they grow faster and they create jobs. And there's a real need for capital in that space. It's been historically expensive, difficult to reach these customers, and we try to do so through integrations with our partners, but also through a high degree of automation. The other customer set we serve are tech platforms or payment companies, or really very wide range of partners. They typically serve a large set of small business customers, and they would like to support those small business customers, but they can't stand up a lending program themselves. So what we're seeing at YouLend is that small business customers increasingly run their business on software, whether it's on Booking.com or Grubhub or DoorDash, or it's on Amazon or Shopify. And those software companies are really integral to running a small business. We see that banking services, whether accounts or payments or lending, will be delivered through these tech companies in the future. And YouLend's really here to enable that transition. So we try and operate as an infrastructure provider in the background. We're not always very visible to the end merchant, and they'll experience that their product is branded in their partners, in our partners' brands, whether that's, as you say, Amazon or Shopify or eBay.
All right, I see. And who is the ultimate customer? Is that merchant, or it's the platform, fintech, bank? Who's that ultimate customer?
So the ultimate customer is usually the merchant, and the merchant we provide some sort of financing to, and we'll have some contractual relationship with the merchant. But you could say our go-to-market motion involves first convincing a platform or StonePay, for example, that embedded financing is something they should offer. So we spend a lot of our time convincing platforms that embedded financing is going to be good for their end users. And then once we've integrated our partnership through the APIs or referral journeys or whole host of different integration options, the end customer becomes the merchant who needs financing. So to give a bit of sense of scale, we finance about 15 to 20,000 businesses every month. So there's quite a lot of customers coming through, and we probably have a little bit more than 100 large distribution partnerships. So that gives you a bit of a sense of the reach. You mentioned we're live in the UK and Europe. We're also live in the US. We have an office in Atlanta, Georgia. and it's a large and growing part of our business. So we're really sort of USD, Euro, and GBP focused business, headquartered in London, originally from Denmark, with a large office in Berlin as well.
I see. I see. No, thank you for sharing this. You said merchants are your ultimate customers, but you also work with the platforms. Does it mean that anyone can come and integrate with you guys? Because I
So
remember from my experience that you have strict requirements. It's not like just I come to you and we start the integration and I start offering lending services. No, it's not like that.
A lot of our partners integrate with our APIs, and there's a set of documentation you can read and you can integrate. But we find that it's usually not very valuable partnership if our partners don't have a certain customer set, because it takes a bit of learning for our partners to understand what's a lending product, how should we distribute it, what customer sets is it appropriate for. So we tend to set the bar relatively high so that we can make sure that it's a worthwhile investment for both sides. That being said, over time, we've brought the integration costs down, and I don't think you need that many customers today to be able to integrate with YouLend. And we also integrate with quite a lot of sort of early high growth platforms now that we've become a little bit more efficient than back when you were at StormPay.
I see. No, from my time at StonePay, I think it was like 5,000 merchants or something like that. You had to have before you go and make integrations. Tell me a bit about your customers. Give me some examples. Like, who are your customers?
Yeah. Do you mean are you interested in hearing about the small business customers or
No, I mean,
about the platforms?
I'm really interested in learning more about actually the platforms that are integrated with you, and let's say that way are offering, let's say, lending services to their merchants.
Yeah. So we have quite a lot of different types of partners. So maybe I can start with some of the partner types that have adopted embedded lending for the longest, and
Yeah,
then come to some of the more recent adopters. So I think historically you would have seen payment companies and e-commerce platforms as the most likely adopters of embedded finance. So if you go back 10, 15 years, you would see that companies like Square in the US started to offer lending to their business users, or e-commerce platforms like Amazon. And I
yeah,
think what we've seen in the last 10 years is that companies in the payment vertical and in e-commerce vertical understand that part of their playbook for value-add services is that they should offer lending. And they do that because lending is really good for their core business. It allows their underlying customers to grow, which increases transaction revenue. It lowers churn. Typically, we see churn is about halved. And it's
yeah.
also a good commission driver for the platform. So that's been a real driver for payment companies and for e-commerce platforms. So at YouLend, we serve payment companies like Stripe or Fiserv, Global Payments, WorldPay, Payment Sense Dojo, Molly, really a wide range of e-commerce and physical point of sale
Okay,
solutions. And in the e-commerce space, our partners include Amazon, eBay, Etsy, Shopify.
okay,
So a broad range of e-commerce platforms.
I
What's
see.
been interesting to see in the last few years is that we've also had a lot of new verticals start to offer embedded financing, and we think of these as more vertical specific software providers. So one
Okay,
example is the food delivery vertical, where you have platforms like DoorDash, Grubhub, Just Eat, Deliveroo, and those companies have increasingly also adopted embedded financing. Also
I
see it in
see.
the travel space, like Booking.com, Airbnb is playing around out there, though not a partner of ours.
Yeah.
So we see that it's generally becoming integrated in the playbook for a lot of other verticals as well.
Okay. Okay. And Jakob, would you explain yourselves as a like financial institution or rather technology company? Because well, I see that you offer integrations. You say we are embedded finance service provider. Do you guys hold any sort of a license, or you don't need basically a license?
I would say we're quite 50-50 tech and finance. So on
Okay.
the tech side, we need to be able to serve a lot of customers at scale in an automated manner, and we need to be easy to integrate with. A lot of our partners are also tech companies, so their kind of DNA has to also run through our organization. Um, on the other hand, we are licensed in several countries,
Okay.
and we are licensed as a payment institution in the UK, in Denmark, passporting across Europe.
Okay.
You need broker licenses in certain markets. And we also have a really sophisticated set of relationships with institutional capital providers on the other hand, because it's all well and good to build a nice user interface and integrate, but if you can't get access to competitive capital and have really good underwriting, you're not going to be able to do good lending. So we also spend quite a lot of our energy building relationships with institutional capital providers. So partners include JP Morgan, Allianz Global Investors,
Mm,
our owners. So there's a broad range of capital providers, and that sophistication gives us an ability to both approve some of the very prime customers with low pricing, but also say yes to some of the more risky customers because we have this broad range of capital providers. And
right.
that means that we can end up delivering a better solution to the platforms.
I see. And what about your customers? Let's say, not I'm not talking about the merchants. I'm talking about the platforms, payment service providers. Do they need any licensing, or they don't?
So a lot of the platforms who come to YouLend are looking for one-stop shop solutions for multiple geographies. So the regulatory license landscape really varies across US, UK, and the individual European markets. And
Okay.
one of the things that we bring as value add to our platform partners is that we simplify a lot of that complexity away.
All
In
right.
some cases, our partners do end up needing some form of registration. Like, to give you an example, some of the most integrated partners often end up registering as credit brokers to serve German merchants or French merchants. So there's sort of a bit of local nuance depending on the precise user journey in the offering. But generally, what YouLens offers is a one-stop shop where we can take care of everything that can be taken care of for our partners. And that means that our partners won't have to go and get a bank license. They won't have to source a lot of expensive capital. And that's something that really increases their speed to market and ability to scale.
I see. And can you walk me through the process of, let's say, lending itself? Once I, let's say, integrate YouLend, how does the process happen? Do I have to follow your requirements, or I can set up my own requirements, saying like, guys, basically you provide this and that. I don't need to redirect my customer to your website. Everything happens on my interface. So how does the flow happen?
Yeah, so it's a good question. We have a really broad range of possible solutions here. So maybe I can take
Okay.
you through the most integrated to the least integrated. So on the most
Okay.
integrated end, you will work with YouLend's implementation team, read our APIs, and you integrate the user journey so that it's fully in your interface. So
Mm,
let's say a customer of Sam logs in and he can see, hey, I'm pre-approved for up to $30,000 in financing, and here's the price, and here's the repayment terms. You can click accept it within your user interface, and you will have funds dispersed to you.
okay.
When you manage repayments, you'll also be able to see the repayments in your interface. So you never have to leave, and it's fully in your journey. On the
Okay.
other hand, we also have simple ways to go live where you don't have to do any tech work, where you just send out marketing for financing, refer customers to a YouLend hosted website, maybe in your branding, and the merchant applies there. That's a nice way to get live quickly, test out product market fit, see if you trust YouLend at all. And then if you think it's good, you can invest a bit more energy in integrating. So in
Right.
between those two extremes, we have a range of integration options as well. Like, we have some SDKs that make it easy for you to embed a journey without having to do the full designs. Um, and we also have various other hybrid solutions. So we really try and enable a sort of, a broad range of integration options so that we
Right.
can serve both the most sophisticated and the less sophisticated partners.
And who does the scoring? Is that you, or let's say the organization that's doing the underwriting?
Yeah, so when YouLend started originally, we would always do the underwriting, and
Okay.
because we were also on the hook for making sure we got repayments, and that often goes together.
All
But
right.
over time, our business model has developed so that we don't always provide the full stack of lending services today. So we
I
have
think it
situations.
varies from region to region, right? Again, the UK, Europe, the US.
It varies a lot, actually by partner. So some of our partners are quite sophisticated and underwrite businesses themselves and actually want to bring their own capital as well. And we
Okay.
have some solutions where it's not YouLend's money at risk, it's not our underwriting, but we provide, say, regulatory licensing or customer servicing or collection
Okay. Okay.
services. So over time, YouLend has gone from being always selling our full stack lending service to now
All
selling
right.
a modular set of services to our partners. And that's been really in response to our partners' demands, who are sometimes quite sophisticated and would like to maybe lend out their own money in Germany, but would like YouLend to lend out in the UK, for example. So
Okay.
um, it's usually the case that we do the underwriting and we're responsible, and we're also responsible for getting the money back. But in increasingly a lot of cases, it's no longer our money at risk, and we just operate as a software as a service provider that makes it possible for our partners to do lending.
I see. Did you develop yourselves the scoring model, or like you are using third-party providers?
Yeah, it's a core part of the YouLend IP to get our credit risk assessments right. So we run a model which is both sort of has some global elements and some local elements. So
Okay.
we find that elements that are quite lend themselves well globally are things like forecasting a merchant's sales or analyzing volatility in their sales
Mm,
data.
mm.
Whereas when you things that need to be done locally have more to do with understanding bank information or bureau information. Sometimes you have access to local data sources that are really powerful in, say, Germany, but you can't get them in France. So you want to still get those and use them. So we have a global risk team with local
Mm.
specialization, and they spend a lot of time trying to improve the Gini of our probability of default models and try and kind of reduce the variance in our revenue forecast models, that sort of thing. So when you asked before if we were a tech company or finance company, it's really 50-50. Like we have to, a lot of what people see may look more techy, but a lot of people internally are working on things that are more traditional finance heavy, like risk modeling, engaging with capital markets. And we have to have that kind of mixed DNA to succeed.
Jakob, tell me, there is a tricky part. For example, some businesses do international business, right? Let's say I'm a platform and my merchants, some of them are in the US, some of them are in the UK, and some are in Europe. Does it mean that my let's say customers who are in the US get higher rates because again you guys are based, let's say, out of Europe? Or how does it work, especially when the businesses are international? How do you do the scoring? Because it's very tricky. It's not like you have access to all the data, unfortunately.
Yeah, it's one of the big selling points of YouLend is actually that our global partners like an Amazon or a Stripe can
Okay.
come to YouLend and get the same product experience but in multiple countries. So we are
Hmm.
so what we call a one-stop shop. Um, Now there is some variation across markets. Like we use different legal structures depending on the market. The cost of capital is slightly different per market. The risk assessment, as you say, is slightly different.
Hmm.
But it's what YouLend tries to do and sort of has successfully achieved in the markets we're live in today is to make sure we have a really deep set of capital providers for all the markets and really good risk
Okay.
assessment that is local to each market so that we can offer something competitive just in the US or just in the UK or just in, say, Poland.
Okay.
So, um, but yeah, if you're an let's say you're an Amazon merchant in Germany and you're one in the UK, you'll get the same user experience. There'll be small variation in your price depending on the risk assessment that comes out. The cost of capital is a little bit cheaper for euro than for pounds. That will be reflected, but
Okay.
otherwise it's the same product, and that's something that we that a lot of our global partners really appreciate.
Can you tell me, please, what types of data are you guys looking for when you are doing the assessment that, for example, traditional lenders don't do? What makes you different when you're doing the assessment from banks or, let's say, a few other traditional players in the market?
So a lot of credit assessment historically has focused on what we call backward-looking data points. So that might be annual accounts published 1 year ago. It could be credit bureau data that is often a few months
Hmm.
stale. And what Ulens try to add to that is some more forward-looking indicators. So we spend a lot of time modeling sales forecasts for our merchants based on their sales data. We often get that as first-party proprietary data from our platform partners, and we try and predict how is this merchant gonna trade in the future. The
Okay.
other things we look at are things like website visitors, fraud rates, return rates,
Mm.
and we get quite a lot of proprietary data from our platform partners that enable us to see stuff that a kind of standalone lender would not be able to see. Are your reviews going up or down on Amazon? Do you have a lot of chargebacks for your deals recently on eBay? Have you switched your bank account to somebody who's not associated with the business? That's probably a sign of fraud. So we get a lot of those sort of data points which are really helpful. But I think the most important point has been to try and look into the future as opposed to just looking backwards.
Yeah.
And I think that often allows us to say yes to some of the businesses that maybe look small but are growing.
Here's a tricky question. Look, imagine I'm your platform partner, right? I have a number of merchants working with me, and I say, like, Jakob, would you share data with me? let's say for me to further develop my solutions, because additional data would help me to understand my customers better. And also, would you share data with me, what's happening in the market in general, let's say, because again, you are working with multiple partners and you have to broader range of data than I do. Would you share the data with me or not?
Yeah, it's a good question. We tend to say we have a bit of a Switzerland approach, right? We're neutral. We work
Okay.
with a lot of competitors, and we have to be really thoughtful about what we share back. So, things we can never share with our partners is information about their competitors' portfolios. But what we can share with somebody is information about how their own customers are repaying. What
Okay.
sort of bank accounts are they connecting when they apply, if they connect bank accounts? We can sometimes provide high level information about the portfolio, and
All
that's
right.
even that is a little bit of a sort of point of contention because a lot of our partners could also build solutions themselves, right? So
Yeah.
when
Yeah.
we work like, for example, offering lending to Amazon merchants, Amazon for a long time did their own in-house lending program. So
Of
we
course.
were playing back to them information about how the loans we were issuing were doing, and that meant that Amazon could at some point decide to try and do the same loans we were doing. So it's definitely a tightrope to walk in terms of kind of competitive dynamics. And I think
Absolutely.
at YouLend, we take the view that um, we have a lot of benefits to scale, both on the capital provider side, on the risk modeling side, and in the
Sure.
user journey side, and that we just need to keep trying to win our partners every day, and we can't win them if we keep a lot of information behind closed doors. So I think it's a way
True.
of making sure we stay on the top of our game.
Jakob, do you guys lend for software providers? I mean, not only, let's say, physical goods, but software as well. Do you do lending for software?
So yes, we do. So we generally lend to most small businesses unless they're in industries that are really hard to KYC or complete anti-money laundering checks on.
Okay.
But the kind of what we tend to look for is that a company has some consistent sales record, or track record of
Mhm.
generating sales, and we also see that in the in the software space.
I see. No,
So
that's great. Let's talk about your go-to-market strategy. I heard that you guys opened a hub in Berlin. So what's the idea behind that?
yeah, so as you said, kind of, we talked a little bit about this earlier, but YouLend, we go to market through partners. So the beginning of our go-to-market strategy is always find large global platform tech
Okay.
companies and try and partner with them.
Okay.
Um, because we go to market through our partners, it's very important that we are also close to them.
Hmm.
So we have offices today in London, in the US, in Berlin, and in Copenhagen, and that's been a bit of a reflection of where a lot of our partners are based.
Okay.
Germany
Okay.
and France have been large growth markets for us in the last few years.
All
And
right.
the Berlin office is also a reflection of the fact that it's easy to hire local talent in those markets. So this is really, a reflection of us trying to get closer to some of our large partners, and a reflection of where we think we need to be building more talent for the next few years.
Okay, look, Jakob, I recently moved to the UK. I'm not originally from here, so and I think it's one of the best locations for fintech. In my opinion, it's the capital of fintech. So I usually tend to compare, let's say, I mean, UK and Europe versus the US. Do you think Europe is structurally harder than the US for let's say customer acquisition and go to market, because Europe tends to regulate strongly versus the US? They have more looser regulation. What do you think?
Yeah, yeah. So in general, I would say our experience of go-to-market has been quite different in the US and in UK Europe. So a lot of the buyers we meet in our platform partners in UK Europe are concerned first with the downside. They're concerned with like, what are the regulatory implications? What could this do to cannibalize my existing products?
Okay.
Whereas a lot of the buyers we meet in the US are more focused on the upside they can generate from a partnership. And then later
Right.
on, they start to do the due diligence. So there's a different dynamic in that sense. I think the other point on go-to-market is it helps to be local no matter what market you're in. So it's a lot easier to sell to a Polish partner if you have a Polish salesperson, and similarly for the US. So it's been a big part of why we've opened offices across multiple geographies, was to make sure we could get the best talent to sell into the local markets.
I have to touch this topic because, again, one of the core solutions, or I would say mode you guys are offering, is risk scoring. Because you said, like, sometimes, let's say, businesses have their own funding. They don't basically need our capital. So we just provide software. most probably it's risk scoring. Are you guys using two technologies? I will touch two technologies. First one, let's start with open banking. So it started really good, but in your opinion, did it take off? And are you guys using open banking collect data and then use it in your risk scoring?
Yeah, so we have a really broad range of data points, and in some of our user journeys, we ask customers to submit bank statements through an open banking connection. Um,
Okay.
we found that adoption has changed quite a lot over the last few years. So when we went live, it was something like 30 to 40% of small business users would trust open banking. And now we see it more around 80, 90%. We've also done a lot of work on the UI side to make it a trusted option to
Mm.
link your bank account through open banking. And it's generally quite good for risk management because it lowers the risk of fraud and it gives you a long history of data. Um,
Mm-hmm.
we found that adoption varies a little bit across the European markets and the UK, but not as much as you might expect.
Okay.
And in the US, we also successfully get customers to connect their bank statements in some of the user journeys. So
Yeah.
that's generally something that's been a step up for YouLend, that we can use open banking as opposed to having to rely on PDF bank statements and scanning them
I
and
see.
that sort of thing.
No, that makes sense. What about AI? This is the second question I was about to ask. So, everyone is talking about AI. Everyone is trying to integrate it in one or another way, and now with the generative AI. So, where are you guys there? Are you implementing anything in that vertical?
Yeah, so yes, long answer for you, but maybe a nuanced one. So, um,
Sure.
for many years, we've been working with AI in the form of machine learning models to predict probability of default or produce revenue forecasts.
Okay.
And they've been quite powerful. That has nothing to do with all the LLMs that you're seeing nowadays, but we've been using those sort of algorithms to train our models before.
Okay.
The balance is that because we are lending out money, which is a pretty serious business, you also need to make sure that it is well managed, carefully monitored, that you understand why you're making the decisions you do. So there's quite a
Mm-hmm.
lot of guardrails around how we've used that. In the last year or so, with the really the improvement we've seen in some of the LLM models and their ability to handle complex tasks, we've been able to start to bring that into our operational processes. So we use it in customer servicing to
Okay.
out of chatbot or phone calls that are being handled by agents. And we also use it for part of the operational work that would otherwise be handled by humans, where customers fall outside the automated decision flows. So we're beginning to see some really, really good use cases. And the kind of balancing point for a company like YouLend is just because we manage money, we lend money, we need to be super careful about not making mistakes in what we do, and we need to be able
Right.
to audit and monitor the results.
I see. Jakob, this is an interesting question. Moving forward, if we look forward like 3 to 5 years, because what you guys are doing, basically, you are making lending an infrastructure, which means if I am an SME, I do not really need to go to the bank because I can again work with my payment provider. I can work with let's say, even my partner that somehow has a relation with me, let's say financial relation with me. So do you think SMEs will go and apply for lending through the banks, or this type of stuff will basically disappear and lending will be available in most of the platforms that businesses are using in day-to-day operations?
Yeah, we really believe the latter, that over time it'll become more and more normal to access financing within the software you use to run your business. And maybe one way to think about it is um, very few customers just need money. They need money to do
Okay.
something, right? It might be money
Yeah.
to pay for payroll or buy inventory or spend on a
True.
marketing campaign. And the more financing can be related to that job to be done and can be integrated into the experience of buying the inventory or paying for payroll, the better for the small business user. So entrepreneurs are really time poor. They don't want to separately go and get money for something and then go and spend it. They want the job to be done. And I think with all the API integrations and the improvement we've had generally in our ability to build good user journeys, we really expect that financing will be more and more just embedded in the workflows and less
Okay.
is the own thing you go and obtain. I think for somebody like YouLend to win in that game, we have to both be really good at finding the point where money is needed and get it integrated. But we also need to be able to source money that is so competitive that nobody would want to go to a bank standalone to get it.
I see. No, it's really interesting to see how, I mean, embedded finance and embedded lending changing in general. I think, again, it's no longer something, as you said, you go and get and ask the bank, submit physical documents and things like this. Jakob, I really enjoyed this conversation. Thanks again for coming on my show.
Yeah, thank you, Sam. I really enjoyed it too. Looking forward to continuing the chat separately.
Cheers.